There we are. Good morning, everybody. Happy Thursday. Hope you guys are all having a great week. Hanging in there. Everything, if things are going on. Tax season, we're hanging in for sure. We've been riddled. Hold on, sorry. I'm going to make sure I'm live everywhere before I start chit-chatting. Yep, we're live. Cool. So good morning. Welcome. Hello. If you are new here or haven't been here before, I am Bree Beers. I own Bree Beers and Associates. We are a tax accounting and strategy firm based in Denver, Colorado. But we work with clients across the country. I am a CPA, a certified tax coach, an advanced tax strategist, a fractional CFO. I have a bunch of titles, which means I've taken courses, passed tests, gotten certifications. But I also have over 20 years in accounting, 14 or 15 tax seasons under my belt. I don't really know. And I'm going into my 8th year, I feel like, as an entrepreneur. And I think that piece of being not just an accountant and tax strategist, but also being a business owner is what really gives me the tools to talk to you guys and help you guys as business owners understand the tax landscape. For the last 6 or 7 years since I took over as running my own business, I've really dug into learning the tax code, understanding how we can use the tax code for tax planning, tax strategy, minimizing taxes, and figuring out how to take the tax code that many of us think is built for the rich and the wealthy, because they are the ones that have the resources, the team to, take advantage of all the pieces of the tax code. But there are plenty of pieces of that code that are accessible and built for us as just everyday business owners. All right. And so my goal is to take those pieces and help business owners save money on their taxes. If you've been here before, you've heard me say that saving money on your taxes is kind of like giving yourself a raise without working harder or making more money. All right. If you make the same amount of money in your business, spend the same amount of money this year as you did last year, but you're able to cut your tax bill by, $1,000, $5,000, $10,000. That's money that you can invest back into yourself, right? To build wealth, whether that means to invest it back into your business, into growing or scaling, or invest it into yourself via, investment properties or retirement or into your kids' education, whatever that looks like. The point is to keep more dollars in your pocket so you can invest in your future wealth. So today is our Q&A. Every month, usually the first Thursday of the month, we do a Q&A. Sometimes it gets thrown off a little bit, but we are here today. So for those of you that are new here, how does this work? If you're here live and you have questions, pop them in the chat. Those take priority when it comes to answering questions. Otherwise, you guys DM us throughout the month on Facebook, and my assistant compiles those questions for me. I have them in front of me, and that's what I'll go through and answer. And yeah, so a lot of the questions that I've gotten, especially over the last week, have been about extensions. All right, I'm not ready to file my return. What do I do? Next week's training, you guys, is actually all about filing extensions. It's about how to file, when to file, why to file, what does it mean to file, all the pieces. So I'm going to try to, may not avoid the extension questions today, but I'm going to hold off till the end. And if we have time, I'll answer them. Otherwise, I want you guys to tune in next week because the whole 30 minutes is devoted to understanding extensions. Okay, so. Oops, I almost dumped my water. There we go. So some of the other questions we've gotten this year is, so one I got is, how can I streamline my tax filing process? This comes from, I had a small conversation with this person asking, what do you really mean by that? And they're like, it takes me forever. They do their own taxes, right? They don't have a business yet. Because me, I will tell you that if you have anything more complicated than maybe a W-2 and some investments, that you should be enlisting a tax professional to help you. If you have a business, for me, if you have a business, hiring a tax professional to prepare your tax return is is a must. It is an investment that you will see a return on, okay? But if you are still filing your own tax return, all right, so this person's like, I started TurboTax in January. It just takes me forever because I don't have all the documents. I can't remember what documents I need. I go back and then I get busy. All right, so how do you streamline this? So I don't know how TurboTax and H&R Block Online work. All right, but when you work with a tax professional, my guess, you guys, could be that if you use the same software year after year, possibly they know what to expect, what forms you had last year and what to expect this year, and can provide a guideline for you. But I don't know. All right, I don't know that software enough to advise on that. What I can tell you is if you have a tax professional, they will send you an organizer. All right, and this organizer will have a list of all the documents you had last year, right? All the W-2s, all the maybe interest statements, dividend income income statements, maybe any brokerage statements you had. If you had any K-1s from partnerships or S-corps. If you itemize on your Schedule A, it'll tell you what documents you provided last year, your mortgage statement, your property taxes, all the stuff. It serves as a checklist for you to collect those documents. All right. And so that helps you kind of take one flail swoop into collecting all those documents for your tax preparer. For those of you with a business, because I've had some conversations with business owners as well, they're just like, I don't ever file my return on time because I'm just never ready. I'm never ready. And some tough love here, you guys. All right. As a business owner, your books should be ready like at the beginning of January. All right. And I say that to you guys. I say this with love, with understanding. I have been there. I still haven't filed my tax return because my 2024 books aren't quite ready. Okay. But I'm telling, like, in a perfect world, or like ideally, you are either doing your bookkeeping on a regular basis, or you have somebody, you've hired a bookkeeper, you have someone in your business that is doing the bookkeeping on a regular basis. I'm going to go down a rabbit hole real quick because yes, this makes taxes easier. All right. If all you need to do when December 31st rolls around is close out December and your books are ready to go, beautiful. That's usually all your tax preparer needs to get started on your tax return. All right. As they go through your financials, your balance sheet, your profit and loss from your software that you use for your business bookkeeping, they might have questions. They might have more documents they require. Some firms require year-end bank statements or interest statements, things like that, but there should be a checklist, right? And that's all stuff you have. All right. After the year closes, your bank statements are available, your credit card statements are available, your loan statement, they're all available. All right. So compiling those, shouldn't take long at all. All right. But that P&L and the balance sheet, those financial statements, that's the heart of your business return. And that's what needs to be done. And if you're keeping up with your bookkeeping on a regular basis, that's going to be done within, very close to the close of the year end. All right. The other side of that, yes, it makes taxes easy. But also, you guys, if you've been around here, you know what I'm going to say is, as you're building a business, as you're trying to scale your business, as you're trying to grow, and even if you're in survive mode versus thrive mode, whatever stage of business building you're in order to make decisions that will grow your business and help your business, you have to make data-driven decisions. All right. And the data that your decisions are driven by are your financials. All right. So anytime, if it's, I want to hire someone, I want to buy a piece of machinery, I want to add a new line of service, your financial statements being updated and accurate is a great place to decide to start in terms of answering, is that feasible? Can I afford that? Is that within the budget? All right. So 2 reasons to keep your books up to date. All right, but we are trying to focus on tax, I guess. And so when it comes to the question was, how do I streamline my tax filing process? By keeping up with your bookkeeping, your business bookkeeping throughout the year on a regular basis, your books will be all but ready once the year closes out. All right. Elena, good morning. Let's see. So this is my first year filing taxes as a new business owner. Congrats. Yay. Exciting. I know that I can deduct up to $5K in startup costs, but how can I set up amortization for the remaining expenses over the $5K? This is such a good question, Elena. And I'm going to back up and kind of explain, because some people may not know what startup costs are, kind of explain that. All right. So let me hide that. So, okay, my face. Actually, maybe I'll keep it up there. I'll just move the camera a little bit. Which way do I move it? There we go. Okay. So you guys, when you first open a business, all right, so let's say it's Elena, she in 2024, okay, she started a business. It's important to decide what your date of business when you're actually able to open your business and start taking money in, all right? Because a lot of people get confused on when their start date is, all right? So you form your business, you create your LLC, you open your bank account, you do all that, right? Let's say we did that January 1st. All right, we open our bank account, we create our LLC, we do all the things that form our business. All right, but then we have to get stuff in play, right? We're not ready to work with our clients yet. All right, we don't have a product. Maybe we're making t-shirts. All right, and so we don't have anything. We can't actually sell anything yet because we're not ready. All right, so any dollars that you spend building up your business or starting up your business before the day you're ready to make a dollar, okay, that's your startup phase. All right, the day you're ready to sell your product or service, that's your start of business date. Right? It's not actually the day you make your first dollar. Right? And that's where some confusion lies. Some people think that you have to make money in order for your business to be considered in business. That is not the case. You just have to be able to be making money. So let's say January 1st, I set up my business and I am an accountant, right? So I'm good. If someone came to my door and said, do my tax return, I'd be like, okay, I'm ready to go. I don't have a startup phase. I'm ready to make my first dollar today. That doesn't mean someone has to knock on my door today. They may not knock on my door for 3 months because I may need to do some advertising. They might not know that I have a business in place, right? But if I am able to provide my good or service to a potential client, that is the day my business starts. Okay, so that's the first thing to kind of make sure we're clear on. Not the day you make your first dollar, the day you would be able to provide your service or good to people. Going backwards, let's say that was April 1st. Okay, April 1st was the day that we were open for business. We had our online shop open. Maybe that's the route we're going, right? So our online shop is open, our inventory is ready to go. April 1st is the day that we are able to make our first dollar. Okay, all of the costs up between January 1st when we created that business and April 1st when we started, those are called startup costs. All right, and those all add up. And what the IRS, the rule says you have to amortize it. All right. And then there's a loophole that says you can go ahead and expense the first $5,000. And that's what Elena is talking about. So if you spend over $5,000 in startup costs, then you have to amortize the remainder. And she said, how can I set up the amortization? So with when you have a tax professional, their tax software is going to do it. So let's say, Elena, you spent $10,000 starting up your business. We're able to expense $5,000. We have to amortize that other $5,000. We just put in our system, we put in the dates, the amount, and it calculates everything for us. All right, it's very simple. In terms of setting up a manual amortization, I am sure there are tools out there on the internet that'll do that for you. I'm not familiar with them because I don't need them. I'm just peeking. Yeah, there's a few things that I don't know if they're any good, but yeah, if you Google start free amortization schedule, you might be able to just build your own. So yeah, so that's a great question, Elena. So good. So you guys, for those of you that are like, wait, amortization, what does that mean? So let's talk about that. Amortization and depreciation. Okay. When you buy big, so startup costs, like we said, anything over $5,000, or let's say you buy a big, it's really, guys, it's anything over $2,500. That's kind of our threshold. That's the IRS, they call it the de minimis rule. $2,500, anything below that, you can expense, you can just take you can deduct in the year that you spend it. Anything you buy above or over $2,500, so a computer, machinery, those are the two big ones, right? You have to expense over time. So if I go out and I buy a $3,000 computer to replace the one I have right now, the tax law says you don't get to just take a $3,000 expense this year. What you have to do is you have to take that $3,000 and you have to depreciate it. You have to take a piece of it over time. Now, normally that would be 5 years. All right. Normal straight line depreciation says $3,000 computer has a 5-year life. So 3,000 divided by 5. But there are tons of bonus depreciation and loopholes that are available to us that allow us to accelerate that depreciation. All right. We currently have what's called the Section 179 rule, which allows us to take 100% of many expenses with a few guidelines in there. We have bonus depreciation right now that says we can take up to 60% of the cost of our what we call depreciable assets in the year they're purchased. So there are loopholes in there that allow you to take more expense up front. All right. And that's something you can absolutely do. Again, I don't know when you're doing this on your own and you're using TurboTax or H&R Block or anything like that. I'm not sure the ability for that software to do those things. I know that if you work with an accountant, they should be the ones that can advise you on this and help you with that. All right. Okay, let me go back to my list. I already answered that one. Okay. So someone said, how can I save money on taxes if I'm a freelancer? I have a side hustle that I have. So what this person is saying is, so most of us here have something, whether our business is our full-time endeavor, like me, for example, or if we have, let's say we have a W-2 job and we have what we call it a side hustle. We do some freelance work, contractor work, whatever you want to call it. All right. As soon as we have that job, that it's called a Schedule C business, or it can get more complicated that. But as soon as we have what we call that side hustle or that contractor job or that freelance work, that opens up our ability to tax plan and take advantage of the tax code. All right. And this is step one in your tax planning journey. If you have income that is fixed, meaning you just have W-2 income, maybe some, interest income, dividends, things like that, real limited on the tax planning you can do. All right. Very limited. All right. That you may be able to do some retirement contributions. You may be able to do some education contributions, some health. There might be some health loophole or health care benefits you can take advantage of. But I can count it on my hand what you can do if you do not have a tax strategy vehicle. That's what we call it at Bree Beers and Associates. And a tax strategy vehicle is either a business, which can be as simple as a side hustle. People think it has to be your full-time job. Like your business has to be your full-time gig in order for it to give you tax benefits. It doesn't. It can be a side hustle, a side gig, or build a rental real estate portfolio. That's another thing we can do. Have investment properties. All right. Most of us go down the business route. All right. And as soon as you have that business open, that side hustle, that contractor work, the freelancer, you open the door for tax strategy. All right. And moving. And the first step in that, you guys, is moving post-tax dollars to pre-tax dollars. And what does that mean? All right. When you are using post-tax dollars, that's like after you bring your paycheck home, right? It's already been taxed. Those are post-tax dollars. And those post-tax dollars are what we use to live, right? It's what we use to pay for groceries. It's what we use to pay for our car, our home, our mortgage. It's what we use to pay for our kids' sports and their leisure activities. It's what that's the money we use to live. All right. And those are post-tax dollars, meaning they've already been taxed. All right. Well, the first step of tax strategy, step one is have a vehicle, right? That's your business. Step two is figure out how to legally and ethically move some of that post-tax spending and flow it through your business so it becomes pre-tax spending or a deduction, an expense, a business write-off. You choose the lingo. All right. And some of the ways we do this are some of us are doing this on a regular basis. It's become, second nature. Some of us, we got to figure it out and figure out what dollars we can move over. All right. The most common that we have is taking your auto deduction for the business use of your vehicle. Another one is your home office, getting to take a piece of all of our home expenses, right? Our mortgage, our HOAs, our insurance, our property taxes, and taking a small percentage of that based on how big our house is, for our office is versus our house, and taking a small percentage of those and turning 5-10% of those living expenses from post-tax to pre-tax. We have another slightly more advanced strategy called the Augusta rule that allows us to take a bigger amount of money, all right, that of living expense, and make it a business expense pre-tax. What else is there? Auto, meals and entertainment. Oh, no, entertainment's not deductible anymore. Sorry, guys. Meals, right? This is one that, yes, some people abuse this, but most people do not take advantage of this one enough. All right, meals and travel. And we've done trainings on these in detail, and I'm happy to do more if this is something you guys want to talk about. But going out to coffee or dinner with clients, potential clients, vendors, potential vendors, all of those things we can turn into, we can use our pre-tax dollars. We can make it a business deduction. Traveling, going to a conference. I'm an accountant. If I go to an accounting conference in California, right, the expenses for me to, my flight there is a business expense. My lodging while I'm at the conference is a business expense. My food while I'm at the conference is a business expense. My ticket to the conference is a business expense. It becomes pre-tax spending. All right. So we can go, like I said, we've done in-depth training. It's on all these different sections. Happy to do it again. It's probably been a year since we've done it. So, if these are topics that are interesting to you guys, put it in the comments, DM me. And that's how, that is how I make these trainings topics, is from your guys' feedback. All right. Ooh, Elena's back. Hello. Can startup costs include expenses made prior to officially forming the LLC, like buying supplies? Yes. So that, Elena, we're circling back around to the startup costs. And I gave the example, Elena, that we started the LLC on January 1st, and then we opened up for business April 1st. Sometimes we don't realize we're supposed to open an LLC, right? Sometimes we don't realize when we're starting a business how we're supposed to be doing these things. You can absolutely. So let's give the example, Elena. Let's say I just decided I want to start baking. All right. I love baking. I just don't do it enough. And I want to start, I'm good at it. I love it. I want to make a business out of it. So I just kind of start, making, I start whatever. But then, sorry, I went off tangent. So I'm like, okay, that's a terrible example. Doesn't matter. No examples. Let's just go with yes. I'm so professional today, Elena. So yes, if you buy supplies, equipment, anything that's actually for your business, even if you haven't officially set up your LLC, legitimately for your business, that is the purpose of it. Absolutely. All right. And for those of you here, you guys know my number one rule my number one suggestion, advice to you guys, when you're starting a business or you're starting a side hustle or anything, is open a separate business account, checking account. Okay. Always open a separate checking account. All right. And the reason we say this is because, let me hide. Elena's laughing at me. I laugh at me too. That's why I'm here. So by having a separate business account, you guys, that you run, that is where all of your income from your business is going to be deposited into directly. That's where all your expenses are going to come out of, whether they're coming out automatically or you're paying them. You have a debit card. Everything's going to flow through that business account. First thing is, well, I don't have any money there. I haven't made any money. you're going to contribute money out of your personal account into your business account, all right, to start those, to cover those startup expenses or those expenses before you're making enough money to cover them, okay? That's fine. But there's a few reasons you want to do this. The first one is to make sure you're catching everything, all right? You're starting a business. Yeah, you're probably not starting it for the tax benefit, but there is a tax benefit there. So make sure you're taking maximum advantage of it. All right. And so many people are like, oh, I'll add it up at the end of the year. You don't remember things. Okay. You don't remember things. And even if you did, which one sounds easier, you guys? Does it sound easier to just pull 12 months of statements for your separate checking account that all it does is pay for your business expenses? Or does it sound easier to go through all of your personal statements, your bank statements, your maybe your credit card statements, and highlight your personal or your business expenses and start adding them up manually? No, that's terrible. Been there, done that. Not fun. All right. Not fun, not sustainable. It's not something you can keep up with. Like I started this, right? Doing this on a regular basis, keeping up with your bookkeeping, understanding your financials on a regular, monthly, keeping them up to date monthly. Okay. So there we go. Yeah. So, I lost my train of thought because I went to the next question, but yeah. So separate bank account helps you make sure that you are taking getting those tax advantage for your business. All right. It's also going to help you, knock on wood, we hope nobody ever gets audited. All right. Audits happen less than 0.01% of the time. Okay. So audits are not something to be scared of, but audits are something that you want to keep your records as if you're preparing for an audit. Okay. It doesn't take a lot of time. It takes some training, right? You got to train yourself to keep receipts, to use your checking account instead of your business checking account instead of your personal account, things like that. But once you've trained yourself to do these things, it becomes second nature. And should you ever get an audit or examination letter, so much easier for you to just pull a bank statement and hand it to them, right? As a starting point, as opposed to, again, having to go through and find all of these expenses and all of these things. All right. Let's see. I have time for one more. He answered that. Oh, this is a good one. And we will talk again. We're going to talk about extensions next week, but this is a good one. So, it says, why is it important to file taxes on time? Is one day late crucial or still acceptable? Will I incur penalties right away? What does all of this mean? I have a blog on this. Let me put the link in there as well. I will here. Oops. Copy and paste. Okay. It's a blog I wrote, I don't know, a couple weeks ago, but we talked about this. Okay. And again, we will dive a little bit more in next week when we talk about filing extensions, but it's not posting. I'll try again in a minute. So when you're filing your tax return, all right, yes, it is important to file on time. All right, but filing on time can mean many different things, a few different things. All right, filing on time, and I think I kind of made like this. Ideally, you are filing your return by April 15th, and you are paying in any amount due on April 15th. Okay, that's perfect scenario. That's a perfect world. All right, the next best thing is for you to file your return on time and make a partial payment. All right. And a lot of times we get clients who are like, I can't file yet. I don't have the money to pay. I know I'm going to owe and I don't have that money yet. File your return. Okay. You can file your return without full payment. And what we tell people to do is file your return and then get on a payment plan with the IRS. Super easy to do. All right. But then you stay compliant with them, which is really important for a lot of different things. If you are some work industries require you to be compliant with your taxes. Mine is one of them. Financial advisors, I think, are another. If you want to get a house, it's important to stay compliant. If you're looking to purchase a property, So filing with full payment is 1. Filing with a partial payment and getting on a payment plan is 2. The next one is filing an extension with partial payment. All right. Let's say you just cannot file yet. Okay. You're just not in order. You're waiting for documents or your business, for whatever reason, you cannot file on time. File an extension. Okay. File an extension, because filing an extension by April 15th gives you 6 more months to file and avoid the failure to file penalty. The failure to file penalty is the biggest of all. It's 5% of what you owe. All right. So let's avoid that by at least filing an extension. Okay. If you know you're going to owe money, you can make a partial payment or you can make an estimated payment, something with your extension. All right. So if you're like, man, I know I'm going to owe at least, $5,000 this year. You can file your extension, which avoids or removes the failure to file penalty. You can make a partial payment which will reduce your failure to pay penalty and your interest that's involved with that. And at the very, very least, even if you can't pay $1, let's say you're going to have a huge tax bill and you don't have anything to pay right now, still file an extension, because that's going to lower your penalties from 5% a month for failure to file to 0.5% per month for failure to pay. All right. So one more time, and then we'll call it a day. Best thing to do is file your return by April 15th with your full payment due. Next best is to file your return with any sort of payment you can make and then set up a payment plan for the rest. Number 3 is to file an extension with some sort of payment if you anticipate owing. And the very, 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 very least, you should file an extension with no payment. All right. Next week, we will talk about extensions and really what does it mean? What does it do? All the things. Because April 15th is less than 2 weeks away. And we do not want you panicking about that deadline. All right. It is a deadline that we can handle. It is a deadline that if you are not ready for, there are ways around it. There are ways to not make it as stressful or painful as you might fear it is. So yeah, join me next week if that is something that is on your brain. Let's see. I could not click my link to my blog on the Facebook page, but I could on the YouTube page. I don't know. Whatever. Let me make sure I didn't miss any other questions from any of the channels. Elena says, I'd love to hear more about those topics. I got you. Let's see. Okay. All right. So like I said, next week, let me pull my schedule up and I'll tell you what's on the docket. So next week, we're going to talk about extensions. And then the week after, it's loading. Everything after that is kind of up in the air. I have some ideas of what I want to do, but technically, since it's after tax season, we start a new kind of section. So if there's certain things you want to hear about, you guys, DM me on Facebook. All right. My VA checks those on a regular basis. And then she will compile the list of things you want to learn about. And I'll make sure that I get them in the next quarter as we're planning out the next quarter. I know some things we're going to talk about are hobby loss rules. What does it mean? Tax planning for next year, when to start. We'll have our monthly Q&As. How to pay yourself as a business owner. That's a question I get a lot. Health insurance deductions for small business owners, managing estimated quarterly tax payments. Those are all things that I've gotten requests to teach on. So I will be going over all of those in the next couple months. But anything else you guys want to hear about, yes, message us on Facebook and we will make sure we get it on the agenda. All right, let's see. Elena, yes. Are there any, oh my gosh, yes. So Elena and anyone else out there, I gotta get better at remembering to pitch myself at the end, but I forget. So if you guys want to work with us, so Elena, there is a wait list. Okay, I think the link in this chat is the wait list for tax planning. You can use that same link. My calendar will open up again in May, but use that same link to get on my the wait list so we can do tax planning. We can also do your tax return as well, as long as you're good filing your own extension. Let me, Elena, send you the link to my tax discovery calendar, because that's really what you want. If you want us to do your 2024 tax return, that is the link you want. So everyone else that's here, Maybe you're waiting for this link too. So most of you guys, you're in the middle of tax season, or you're done with your 2024 taxes. Maybe you're awesome and you're done. Maybe you're like most of us and you're trying to finish up desperately before the deadline. Or maybe you're like Elena, you're just like, I'm good with an extension. I need more time to just breathe and get this done. That's me every year. So how you can work with us. Sorry, I'm multitasking. I am going to share my tax discovery link in the chat. And this is for those of you that need your taxes done still. You're going to file an extension, but then you need help getting your 2024 taxes done. There it is. So that copy 2024 tax discovery. So this is the link that you're going to want, Elena. I spelled it wrong, but I panicked. Okay, so 2024 tax discovery call. I think my calendar opens back up in May. So just get on that. We'll chat. You'll have filed an extension. You're good there. For everyone else, if you've already filed your return and you want to talk about 2025 tax planning, that is the waitlist link that's, I think, in the caption to this video. All right. So if you want to talk about tax planning and what that looks like for you guys, you get on the wait list. We'll say, hey, calendar's open, make an appointment with us. And we do a free tax analysis for you. What that does is it looks at your 2025 picture and sees, do you have opportunities for what we call tier 1 tax strategies? And we will go over that and we'll do that analysis for you and figure out if you have those I don't know the word I'm looking for, opportunities available. Okay. So yeah, so that's that. Alina, thank you for joining. We had 5 or 6 other people on here throughout the different channels too. Welcome. Thank you for joining us. Those of you that watch on replay, which I know is a number of you, hope you enjoy. And we will see you next week when we talk about filing extensions. Bye guys.